This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
At this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines. So that was a crazy one.
That's what brings the viewers back. That a boy.
Hello, good morning, and welcome everyone. It is Wednesday, October 29th, and this is the AgYield War Room. I, of course, am AgYield Marketing Manager, everyone's favorite backup host, and lead singer for Ryland's punk rock band, the Screwworms, Jack Coakley. If you have any questions or comments today, please feel free to join in the discussion. You can post a comment anywhere you see fit, and we're always answering questions and comments at info@agyield.com. Without further ado, let's shoot it over to Brian with some overnight numbers.
All right. Good morning. Thanks, Jack. D's corn down a penny at 4.31. No beans down 9 1/4 at 10.69, and D Chicago wheat down a penny and a half at 5.27 1/2. We are through 20 of 23 business days in the month of October for crop insurance discovery. Corn is at 4.21 and beans at 10.27. So we'll see what the day brings.
We certainly will. Speaking of seeing what the day brings, Dustin, where's your head at this morning, and what do you think we're in store for?
Yeah, I think, there's some rumors that China bought 180,000 metric tons of beans, which would be the first purchase for the year. That's just a really low starting figure. If that's like, right. If we're talking about a non-negotiated minimum, the market probably got a little overdone, in my opinion. So like you'd like to see like when the Chinese delegation would come to town and we get these big framework deals and they'd announce, 6 million metric tons. I think that's what the market wants to see, is some sort of grandiose gesture. So if it's 180,000 is the first sale, I think that's going to be disappointed. I don't know if you think the same thing, Justin, Ben. That's my thought of why we're down.
Yeah, I think we need to see something grander.
Well, I think, we talked about yesterday a little bit, but you rallied $11 plus beans out forward, basically $1.75 off where we were at some point last year, so on a big rally, so I just think you had a 50-cent rally basically in a couple of sessions, and now you need to see something behind just some positive tweets. We've seen, obviously I think the market's so just numb to like, now you kind of have to prove it type attitude. So I think we're going to actually see some real numbers, to your point, at these levels. Got probably overly bearish, ran some people in. Now we're probably, overly optimistic. We were laughing about an article this morning that the headline was, "A farmer sold some beans in South Dakota because of this rally." I do think the farmer's quite long, especially with crop insurance expiring, and it's worked out great to this date. Like we've talked about, I think I get the reasoning to be open-ended here, but a lot of risk on the downside still. So I like covering it and just letting, see how things play out. Because like to your point, you could, when it's uneconomical, they could come in and buy 20 million tons. Like we've been talking about for quite a while on the show. Doesn't mean it makes sense, but it could make our markets get kind of crazy. So you want to have that opportunity to, if something like that happened, same time, deal could fall apart and you're looking at a 500 plus carry out in beans and you're back to where you were 45 days ago. With the funds probably covering most of their shorts. So I think it's just a lot of risk here, both sides.
Yeah, I agree. I think, options make a lot of sense right now, right? If you need something you can deliver against if it drops $1, or $1.50, which if China is not going to buy from the U.S., it's very possible, right? We kind of need their minimum purchases of 800 million bushels or more to kind of keep prop the market up. What's negotiated? That's the number one question that's going to be coming out of Thursday's announcement, whatever that is. You look at like what's different today. We're talking about a 300 million bushel carryout in the WASD figures, and that's at a record yield. Why is that so low? Well, one could say they may be overstating export demand right now as it stands without China. But crush margins, crush capacity, those have all grown quite a bit. So I do think it would be interesting if they had to hit some sort of minimum, like the market could get really, really excited very fast, which again is why I'd rather have like optionality than just like sell it and be done. Just because you don't know what if they're going to have to meet some sort of minimum, it would probably be that we don't really have the supply to give right now.
Right.
So.
Right. And you look at just some kind of headlines and we rally 50 cents in a couple days, so what you can pay for options, I think, is not factoring in the range of scenarios that could happen here in the next 3 to 6 months.
Yeah, we threw some ideas out in the letter last night. If you haven't seen that, go look at that. Just, if China walks away and like there's no deal done, or who knows, it's so volatile now that they may get into another pissing match and then go right back to tariffs a month from now, even after a deal. So like the need for a floor is there, I think. And I think that there will be some sort of subsidy if China does walk away to go on top of that floor. So it's not like we need every single penny of that break. We just need to make sure that like, if you're at $9 beans, you're probably not going to get enough subsidies to cover that loss from where we stand today. So that's where the put comes in. But yeah, I look at like, just that balance sheet. This is the lowest number of acres we've had really since like 2013 for beans, aside from 2019, which was a trade war year. But we had 20 million prevent plant acres. Most of those acres were recorded prevent plant corn. They really just weren't planted beans, right? Like everyone wanted to plant corn that year because of the trade war and because everyone thought corn was going to be the bullish market. So.
Certainly. We had a few questions come through the comments, guys. I'll give this one over to Justin. Jonathan Smith joins us this morning. Good morning, Jonathan. He wants to know, what about soybean oil? Why is it always down?
Great question, Jonathan. My personal belief is we went through this biodiesel phase, really ramping up. Oil share got to record levels, meaning the value of crush, oil's share of that value of the soybean crush was at record highs, over 50%. So that's a multi-year trade that's been going on, long oil, short meal. My belief is that we're just unwinding that. I think there's too many unknowns with 45Z, some of these other subsidies and incentives. So I think we're going through a big unwind of that trade. And still oil is still relatively high to meal historically. Now I think we'll overdo it. And I think that soybean oil, unless there's major changes in policy, which to all these things that we're talking about would make zero sense to me. It doesn't mean it can't happen. But we're building this domestic base so that we're less reliant on China for export, which I believe is the right path. So I'm hoping that continues. In the short run, I think you're liquidating. I think you're rebalancing. People are taking chips off the table just because there is unknowns on that. And it's turned up on a chart, meaning that meal's turned up versus oil. We can put a chart up of that next, but I think that's why, Jonathan. I personally.
Yeah, I added the chart for your context, the oil share chart.
Right, so you can see it's still very high, relatively, right? So I think it's a correction. I think this is you'll see values, in my opinion, stay above 40%, most likely going forward. And then when you run into years where, demand picks up or, something happens, you'll see spikes over these recent highs. But I think that's why. It's a tough one. And a lot of guys too that, I was one of them that liked trading oil share, haven't traded for months in it because of those reasons. It's just too unknown right now. And I think just the interest has gone out of that. So it's kind of getting back to reverting back to some kind of a mean.
Gotcha. Dustin, I'll give this one over to you. This is our friend Maximilian over in Europe. I don't remember which country, but I know you're in Europe, Max. Can you talk about corn stocks and old crop versus new crop?
Yeah. So, we had that September 30th report right before the shutdown. So they just haven't reported that in the WASDE yet because we didn't get an October WASDE report. But much more stocks than expected, and that's something the market was I think already telling us. We had SEPD spreads go off at a huge carry before we learned that. We didn't see any major basis improvements in parts of the country, which would be indicative of us scraping the bin for old crop. So that all made sense. What was interesting about the stocks report is they didn't adjust the June or the March numbers, which they've done in the past if they have a big build like they did. Which may be that they're just suggesting that it's lower feed demand, right? That could be the case. But yeah, enough of a carry in that it was meaningful. It added some leeway on our yield. And then when you get to new crop corn stocks, I mean, China is the biggest question because, new crop stocks, if you take, I think most people agree that the USDA yield has to come down from all of this disease. So you go Iowa, Illinois, you mark those down and you could be aggressive on marking them down too. Like they're at 219 right now, both of them. So if you took them down to 195 and you kept every other state the same, the two largest producing states by yield and by volume, you take a massive cut of those. And then you take in all the other states as the USDA reports them, and you take that carry in. We're still talking about like 800 million bushels more supply than we've ever had before, right? And I think this is the one thing that's kind of lost on the market potentially is we hear a lot of emotion from growers, but also analysts as well. It's like yield's not there. It's like, okay, we agree that yields have to come way down. But we still have to reconcile with more supply than we've ever had. So got great demand, great export demand, maybe some good Chinese demand coming in. We'll see what happens Thursday, but it's still a lot of supply to contend with. So
and it's still hard just to argue with that a little bit. I think it's hard to say that it has to come down a lot. I mean, I think it's helpful to run those scenarios like you're talking about, but you're talking about so many acres that are west and areas that aren't traditionally the ones that are making up this. I think it's hard. I mean, you see guys in Kansas that are getting double a normal yield, right? These areas that they still do have a lot of acres. They just don't usually care about them that much because there's so many unirrigated.
Yeah.
So I think that's just really hard traditionally, right? When you're used to looking at, if you tell me what central Illinois is through central Iowa, I can kind of guess the national corn yield. And I think that could be a little dislocation from maybe what's happening this year. And I'm not saying it's not down a bunch. I just think it's hard to say that that's definitely going to happen on a national scale.
I agree. And when I mean the yield needs to come down, I just mean in Illinois and Iowa, and maybe it doesn't, but like, I don't think Iowa is a record, which is they're currently projecting. Like just talking to enough people anecdotally that have had yield loss, that I think that would be my personal opinion. Nothing has to do anything, obviously, but to your point, like, yeah, there is actually an inverse correlation between many of these counties in Iowa and Illinois of yield and price, meaning they have low yield. There's usually a higher harvest price than what they had in the spring, right? And so like your marquee counties are going to help dictate that. And so we're not used to, well, it doesn't matter if Iowa and Illinois both together have some sort of yield loss because we had, way too many acres.
Way too many acres, right.
And two, South Dakota yields in the 200s for a lot of these guys that have 160 APHs, and all of this rain in Kansas, like you just mentioned. I mean, it's just so hard to, put all of this together and like try to add up there's a lot of areas in the country that grow corn. And then you had the right conditions for this to be like a surprising outcome if Iowa and Illinois don't have record crops, but still have a record corn crop.
And I think one of the things that's tough too is like when prices were low, call it end of July, August, making contract lows at 390, a lot of guys were like, oh, I'm going to be 30, 40 above a record, which, you know, the weather was looking really good. I think people got super optimistic on yield because prices were so low. So that was the only way to make the math fit. And now it's like, oh, super disappointed, you know, yields are off. I'll take our farm specifically. Last year we had a record by like 30 bushel in corn. This year we're down probably 20 bushel. So it was the second best, tied with the second best ever. So I think when you start looking at like Illinois as a whole, I think it's going to be really hard to market down 25 bushels. Because you go look at those other years, right? 207s, 205s, 211s. I guess that's my point on, it's easy to go anecdotally and be like, this guy's 30 bushels off last year. Or, you know, but then when you add it all up, it's just tricky every year. But this year I think it's especially tricky.
Yeah. Yeah, and I find it interesting that we have such a high cost structure going into 2026. We have all these acres. We have the promise that maybe China is coming in for a multi-year trade deal, which is literally the verbiage they're using. And we have this huge acreage increase for corn this year. China was not involved. And then you have huge cost structures for next year. And then the promise that there will be a soybean market next year. These 26 you said the other day is probably the one thing, like from just talking about market opinion now, not fact, but that does look to be the most undervalued contract in my opinion, because it's going to have some sort of value to keep acres. So
yeah, that's why I think the ripple effects of a trade deal that isn't just, hey, we'll buy 10 million tons this year. I think something that looks 2 to 3 years out and like feel like you have a market back. I think where you start getting interesting out forward. So otherwise my opinion, we'll have these kind of spikes, 50-cent spikes, and then kind of fizzles because it doesn't fix the bigger problem, but we'll see.
Well, thanks for that discussion, guys. I appreciate everyone who sent in a comment. If you had any more comments or you want to, pick anyone's brain here, don't hesitate to reach out. We love to talk markets. We love to talk about your individual operations there. So, Ryland, let's shoot it over to you. Let's talk livestock.
Yeah, well, a little bit of calm yesterday. I mean, it wasn't a full-on limit down day here, so I think everybody realized that, okay, cooler heads may prevail a little bit. I mean, obviously, we saw massive volume. Huge down in open interest. So it just kind of felt like this was the big puke yesterday, seeing some consolidation actually on the live side of the market. We still do have expanded limits, but it does seem like maybe it got a little bit of optimism that things may not just be a complete train wreck every single day this week. We're getting a lot of the week longs out of the market. So like I said, it just feels like wouldn't be surprised to see a recovery bounce here today, see some calm. We're deeply oversold. But we still need some news here. We still need some details about what's going to happen with the border. So, I mean, there's still a lot of question marks as what is exactly going to happen this week with some of these discussions. So just want to keep that in mind. Beef prices were mixed yesterday. Choice was still up, so we haven't seen any kind of we haven't seen any relief on the beef side of things, whereas cash so far on the cattle side, about 7 to 10 lower from what we've seen so far in the north, around 356 to 360, and live a little bit of 230 trade in the south. So that's down about $8 for the week. So I think that trade is likely to continue unless we really see futures make a massive recovery here and actually hold. But at this point, I think that's what the market's going to be expecting, something close to about 230 this week. And as far as on the hog side, fifth day in a row, closed lower here. Just you're still seeing liquidation. Open interest is down another 492 contracts. We would be looking for a bit of a short covering bounce. Maybe we get some optimism because of the South Korean trade deal, but the details are sparse. So we really don't know anything yet there. So overall, I think the market's going to be waiting for details on China, South Korea to see if maybe pork is included in any of these. But at this point, we're pretty deeply oversold in just about every protein market we've got right now. So we expect kind of wild, maybe some recovery bounce kind of trade here today.
Excellent. Thanks for that, Ryland. Looks like we just hit the open. Let's go over to Brian with the opening numbers.
All right, thanks, Jack. Yeah, D's corn has turned around to the positive side here at 433.5, up a penny and a half. No beans are just down 2.5 at 1075 3/4, and D Chicago wheat up a penny at 530.
Thanks for that, Brian. Hey, listen, if you like watching the show as much as we enjoy putting it on, feel free to give us a like or subscribe. It doesn't cost you anything to do so. It helps us get our show out to a larger audience and appease the YouTube algorithms. So thanks to everyone who supports the show and submits their comments and questions. Really do appreciate that. We're doing this every day that the markets are open at 8:15 Central Time on X, Facebook Live, and YouTube Live. Appreciate everyone's thoughts and comments today. That was a great show. Dan will be back tomorrow, and I hope everyone has a great day, and we'll talk to you soon.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.